What's going on, everybody? This is Jordan with Conquer Trading and Investing. We're getting ready here for our live session. Markets are moving. There's a lot of opportunity. Looking forward to going through this together with you all. Well, we're here on Bitcoin, so let's take a look at what's going on with Bitcoin. We're seeing this little bit of pullback. Hey, let me start off with, first of all, there's nothing else on the calendar the rest of the week. No high impact news events. But obviously the markets are factoring a lot of things. Headline I read this morning on Zero Hedge is futures are sliding because of renewed trade war fears and surge in virus cases. So two things. First of all, we've been watching the slow motion escalation in the trade war, but the surge in virus cases, I saw a headline that the WHO said there were the last million cases came within the last week. And then I started seeing Fundstrat putting up some. I said, wait. We were one of the first back over in back in late January during our live streams to start worrying about what was going on with the virus, if it could become a pandemic, what that would mean to the economy. And back then, Blair from the group over here actually introduced me to a Chris Martheson's video on Peak Prosperity back in January, and he was one of the first people that I followed on the whole process of throughout the coronavirus. He was absolutely correct about what was happening as it was happening before it happened. So I said to myself, well, let me go back to the sources that I followed back then, which was also Eric Townsend on Macro Voices podcast. Right? Eric, all of February, was very adamant about the situation and what the effect it was going to have on the markets. So these are the two voices, along with my own, that I want to lean to in this moment and think about what I think about the coronavirus. And I did think about it this morning, and I don't see them actually saying anything. Chris has some, interesting content here about possible mutations to worry about and things like that. But I'm not worried right now about the virus at all. I'm not worried about it at all right now. And that's because I believe that we're going to have a second wave. I believe the second wave is going to be sometime in the fall. And I believe the second wave is going to be much worse. I believe that. So right now, as the cases continue to escalate, I think this is all part of the first initial wave. It is what we thought it would be the whole time. And I'm more interested in what happens in the second wave. I think the market right now is not really pricing in any coronavirus fears at the moment. Now, of course, when we looked at in yesterday's video about whether or not that perhaps we could see a big market crash. Are we in a bear market right now? We looked at all that, but right now the markets are looking pretty solid over here. If you look at the equity markets, yep, right. I talked about also yesterday. If you're looking to go short here off this resistance, the play to do was on the 8-hour time frame to take an entry when the 8-hour made a lower low, right? So that was the correct play as we came over here. So if you did that, I mean, it's not interesting to me. If you did that, right now you're just kind of holding a trade, barely in profit on the right side. I don't know how much downside movement we're going to get at this moment. But you're positioned for if it happens, obviously ready to reverse back long, because right now this is very, very bullish here, the equity markets. We also looked at, and you can see right now, let's look on the 3-day time frame here at the Dow, and you can see this looks a little bit concerning, right? This looks a little bit concerning. You're seeing the lower high put in, and then you're seeing these wicks up here. This is the 3-day time frame. And yeah, until it starts making higher highs on the 3-day here, it is looking like, this thing is consolidating to pulling back, retracing a little bit. S&P looks very, very similar. The only one that looks healthy is the NASDAQ. Looks very, holding towards the top third of the gains that it's put in. It looks pretty good. This could continue to go on to spike from here. Does it look like it's on jeopardy of possibly rolling over, kind of like the Dow and the S&P look? No, not yet, not just yet. So let's not get ahead of ourselves. The dollar also is kind of range bound. It's kind of range bound, and it might continue to stay so. Yeah, it's not very exciting. Definitely, we're seeing a shift over here where we're now definitely seeing the dollar weakness as the prevailing theme over here. And that really is going to continue until we get, it's going to continue until we break back above, I would say 98.30 at this point. 98.30 at that point, then we would have to favor dollar strength. But more than that, I think it's a little bit range bound. You look at gold this morning, and gold is looking to break out over here. See that over here? Gold, I mean, the off of the support over here, which on the 8 hours clearly was the entry placed down over here. And then again, to possibly add over here, gold could be now, after the breakout, coming back now and testing this resistance. If this holds, we get a pullback, and by pullback, I mean on the 8-hour time frame, we have at least another bar making a lower high. That would be a pullback as long as this support over here holds. And then if it resumes up, that's a place to go ahead and get long gold. Gold should now be testing 1800 if it's able to hold this support over here. So gold is very interesting to watch right now. Looks good and continues to look good. And gold and Bitcoin both are really going to be a lot more interesting now than is going to be the dollar or the S&P. So we'll be mindful of that. Silver is lagging right now. But Mohammed, you have an issue? My screen goes blank. I hope no one else is having that issue. I'm sorry that you are. If anyone is, please let them know. Always be looking to help each other out. Silver's not really participating so much in today's gold. Let's call it. Gold was looking a little more bullish, pulling back right now. Silver wasn't participating either which way. And you can see though silver looks really good though. Silver looks also really good. I think that gold, got a little spiky over here. Having trouble holding those gains. But it does look like now it is perhaps working its way up. I think that gold is going to do the hard work. Gold needs to really claim the 1800 level. And then I think silver will probably follow from there, much like Bitcoin and the altcoins work. Speaking of Bitcoin, it is continue to consolidating really nice, getting ready for its next leg. And hopefully that looks like it's going to be up too. I think Bitcoin right now and then gold are the two places to focus your resources on, right? As they are both really going to really excel over the next 18 months. Over the next 18 months, both are going to really excel. We're going to see, obviously, some more stimulus. We're going to see a lot more printing. We're going to see a lot more accommodation. Are they going to start taking money away? Is that something we have to worry about with the markets over here? I don't think they're going to be in such a rush to go ahead and start pulling so much liquidity. We did see over here, we saw them pull some liquidity and we saw the markets follow. So be aware of that, right? That's happening. We saw the Fed pulling liquidity. We saw the markets drop. How much liquidity they are going to pull, or are they going to add more? That's what we need to really be watching right now. Yeah, wow, Kyle, that's a pretty big prediction there that all markets are going to fall. I mean, we'll see. That's kind of cool. That's only a little bit away. Listen, both gold and Bitcoin have proven if we get any type of liquidity crisis like we'd had back in March, if that shows its head again anytime soon, they've both shown that while, of course, they're all vulnerable during the midst of the crisis, that crisis is very short lasting. It is going to be addressed very powerfully from the Fed as well as from governments. And then, Bitcoin and gold are both really resilient and bounce back the quickest, right? Bounce back the quickest. So, where are you looking to protect yourself? That's the question. Let's look at the US dollar, Japanese yen over here. This is becoming interesting over here now. You could see, I'm just going to look over here on the 8-hour swing traders perspective, and you could see this resistance over here, right? Since it is taken away, we're coming right now into this bit of support, this local resistance right over there. And if we're rejected here, and this resumes downward, it looks like we're now getting a range expansion once this level of 107 broke on the US dollar Japanese yen. Once that level broke, it since looks like now we have the possibility of getting a range expansion. If we go ahead and take out this 106 low over here, there could be really a further extension right here as we're now currently pulled back. You could see probably if I pull up the true trend, it is now currently showing a downtrend. Range is expanding. This looks like a good place to possibly look for a short over here if we would get a signal. Let's take a look around. We see that the dollar is basically mixed this morning. We have about 15 minutes to the U.S. equity markets open. Let's look at some pairs. Some of the programs, some of the stimulus programs are ending and new ones will soon be beginning. It's a question of how soon, right? I don't think we're going to see any bipartisan stimulus programs going into the presidential election, but the U.S. Treasury has $1.5 trillion of cash it is sitting on, and that money will be put to work. So that will be, when that comes, well, I don't think it'll really come before July, before the summer, but I could foresee that happening, sometime in the early fall so that it has time to take effect before the election. Boom. Amy. So this is something that needs to be talked about over here, and that is Amy's talking about she's made some profit on the euro US dollar and then gave it back. And the reason I bring that up, I think it's really important to understand as a trader, right? How you turn the difference between break even and the difference between profitability, right, is being able to go through those stages when the market is not moving. Here's the market putting on a really big move, right? Here's the market consolidating. When the market's consolidating, the goal over here is really to be as close to break even as possible. That means taking some losses. It means taking some small gains, and it means a lot of break even trades. That's what you're trying to accomplish through this area. And then when you get the range expansion, that's when you pull ahead. So more often than not, you're fighting you're fighting the consolidation. You have to be okay with taking trades, at slight profits or break even, so long as you are getting those other trades, which are really falling into profit. You're able to manage them and get as much as the market will allow you to get. But if you're not focused on those trades, and the only way you could be focused on those trades is going ahead and taking a fair amount of break even and small losses, right? That's the only way you could get there. So you have to work through that. The only way you could work through that is if you understand it. Yeah, Mohammed, let's take a look right now at the pound New Zealand dollar. New Zealand dollar is the weakest pair on the session. How do I know that? I actually just read a headline off of forexlive.com this morning, and it said the US dollar is the strongest. Oh, the US dollar is the strongest. Okay, and New Zealand dollar is the weakest. Well, all right, that's what I was focused on, New Zealand dollar being the weakest. And the only other thing I saw on this, I just read a headline that said the calendar is light today. That's really all I read, right? It took me about two minutes to do that. And then, yeah. So I saw New Zealand dollars weak. This looks like an opportunity perhaps though, right? Like you are in a strong downtrend over here. You are looking still to sell resistance. Where's the resistance? Well, you have a bunch of them coming up, right? You have one right over here that you're at right now. You have another one right above there. You have this line over here at 109.73. So you got a bunch of opportunities to look to sell this resistance over here if any of these are able to hold here on the pound New Zealand dollar. Yeah, no, we didn't take a look at WTI. Let's do that right now. WTI is challenging 40. Look, it's just really consolidating in this large range that ahead of time we were looking for it. Continue to look for it to close the gap over here and then maybe even challenge 45. This is when I believe it becomes, once we close this gap over here. Did we close the gap already? We might even close the gap. That's one milestone. That's one milestone I was looking for. Now I'm looking for a test into 45. That's going to be, I think, a long-term place to look for positioning perhaps into a short oil trade. Reason being, like I said earlier, I see that second wave coming. I definitely see further global slowdown. Probably WTI could be a good place to trade that. What else is going on over here? Let's take a look at some cross pairs. Let's take a look at a lot of cross pairs, starting with the Australian dollar, Japanese yen. The reason why I said starting with is this is a risk on, risk off pair, right? And are we seeing a big move on this? Not really, right? It's within that range that we're looking for it to be. And that's why I had that squiggly line right over here. That squiggly line is to show that we are within this range, consolidating. It's still holding true. A break down or a break out of this range should lead to the next leg. That's where we want to be involved. Right now, I think it's going to break towards the upside, but it could go either way. What else could we look at? Let's look at the Euro Japanese yen. Euro Japanese yen over here, possibly right here, setting up for a short right over here as price has pulled back into this resistance and is now resuming down out of it. Yeah, that looks like it's possibly the first pullback of a new trend developing. It's definitely a signal. You could also see at the same time that, I can't draw down there, at the same time, we are... There, I could draw them there. You could see that we are basically trendless. And you could see the jumpiness of the entry CCI. So, but it is a short signal. It's a short signal. That's one to watch. I don't know if that's the best opportunity. Going back to the US dollar, Japanese yen, I feel like that's a better opportunity if we get a signal over here that's more attractive. US dollar, Mexican peso rolling out of the support over here. I don't know if anyone got long on this. If they did, great entry. And if we do see a retracement, if we do see a retracement in the equity markets, as we are, trading off of the resistance over up here, right? As we're trading off the resistance over here, any type of pullback could be played here long on the US dollar, Mexican peso. US dollar, Canadian dollar, similar price action over here. It is rolling off here off the support. These are both possibilities for long entries. Canadian dollar, Japanese yen. What's going on with the Japanese yen? I just see a lot of consolidation. You could see that taking place here as well. Again, I don't have an edge about which way that breaks out. You know, we'll see what happens. I think that's not as attractive though as what were we looking at? The Euro Japanese yen looks better. That's why it's highlighted. Also, the US dollar, Japanese yen as it comes into this area of support. Markets are moving like that. Let's see what else we could see over here. I do want to take a look at the Australian dollar, US dollar. So it's lost. Okay, so this is a great pair to look at right now. I want you to focus in over here and see that as we broke out to the upside here above this resistance, and then we started trading up. Look how we were protected from an entry over here as price never made the higher high while holding the support, giving the opportunity to get long over here, protected. Do you take the short over here? I wasn't even on my radar, but I have noticed and continue to notice that a lot of price patterns when you have like this up candle here, an up candle on the support or a down candle on the resistance, and then the following bar makes a higher high or lower low past the broken support or resistance level. That tends to be a bigger move than the biggest move that you could see on a failure. So where are we now? So Australian dollar, US dollar, yeah, it's on the back foot right now. Is it possible today that this is all a wick, that we close higher than the support? If that's the case, and then we start making higher highs, that is definitely a place to look for a long here on the Australian dollar, US dollar. Euro, US dollar, same thing. We had the break here of the resistance, right? Don't play the breakout. And then you came into the first area of trendline resistance. Since then, we're waiting for a long entry, but it pulls back, keeping us out of the trade to the long side, protecting us, right? Where does this become a failure, right? If you take out the low of this descending wedge at that point, then this breakout here, it was a failure. Should you be looking to buy any type of pullback right now? Well, the thing is you wouldn't get, in Asia, if this made a higher high, that's not a signal you would take. However, just so if during Asia you made because Asia is small volume, let's say it was just the price bar like this. This was the price bar from Asia. And then London made a higher high than Asia. That could be a long entry over there on the Euro US dollar and a pullback and a resumption upwards. You could watch out for that. Now, if we see further downward momentum, either through the rest of this session and or overnight, there might not even be that opportunity, but that's something that you could watch for. That's how you would get into it. Let's check it out. New Zealand dollar, US dollar. Down 1% on the day, coming down, working towards an area of support. You could see where my mouse is, where Thomas is viewed. I see some local support right there. Looks like it's got a little bit further of a possible pullback in it. And let's see, this is where we've spiked down to these 2 times, which is why I have the support there. More often than not, you try to put the support at the close of the body of the candles. But when you see the market then twice spiking down, that's why I would have the support a little lower in this case. Sorry, I just got to update. 69 Moonland. What? I read one comment the whole time, and it says that the 69 moon landing was a hoax. Just let's see what's going on over here in the comments. That's classic. By the way, it's been a good session so far. We have 167 likes. If you're enjoying the session, if you're learning anything or you appreciate the time spent together, do go ahead and smash that like button. So support for me and the channel. I definitely am grateful for that. It does show your love and your support. It's awesome. Can we please look have a gold right before the market opened? Yeah, and gold, of course, was where we started off our presentation today, because gold here is breaking out. Now gold is coming back down here and testing the breakout right now. It's testing this area. You know, you have this last swing low down over here. You have that last swing low, and then you have where the entry came from. So gold is looking extraordinarily bullish. Don't get caught up thinking that this is a false breakout over here. I think you're going to get caught out on what's a false move if that were to occur. And, you know, gold, change your mind frame. Gold, this is the season where gold is going to really continue to thrive, as is Bitcoin. Bitcoin and gold, obviously the gains in Bitcoin are not even going to be comparable to the gains on gold. Nevertheless, gold will be out of the big four. If you look at, you know, the S&P, it's quite possible that it does come under some type of pressure and retrace. It's quite possible we're seeing over here the highs on the NASDAQ, or, you know, potentially, let's put it that way. And if that's the case, I don't really see, you know, S&Ps as a really good play unless we get a second wave and we start seeing a crisis occurring of bankruptcies where, you know, then short the S&P doesn't make any sense. Now, Murray, I'll check that out in 1 second. And what about the dollar? Again, the dollar, I think more than not, is going to be remaining pretty range bound overall. Now, it's a pretty big range, and we want to play those swings on FX crosses because there's big moves. There's really big moves, but I don't really see the dollar breaking back above 100 and probably below 95 anytime soon. So that's a pretty big range that the dollar is in, has been in, right? Going back 5 years, look at that range I just put off for you. So the last time we were outside of that range was going back, not 5 years, I'm sorry, going back to, let's call it October of 2018, and all the way through June of 18, we were in that range. So, you know, I really think that we're going to be trading more probable not within that range. So gold and Bitcoin look like the best assets that you're going to want to be positioned into and continue to position yourselves into for the foreseeable future. Yeah, hold on. First of all, Murray with the super chat, is asking, why do commodities get sucked back with stocks? Why do commodities get sucked? So that's a good question. He's noticing the relationship when the U.S. equity markets are coming off that you're seeing commodity currencies. Is that what you're focused into? Because I focus on the currencies themselves. So, I mean, gold is a commodity, right? Bitcoin is a commodity. Do Bitcoin and gold get sucked back with stocks? Not necessarily. The correlation there is fluid. But you see, for example, the Australian dollar coming off today, right? 0.5% like the U.S. markets are. That's a commodity currency, right? As is the U.S. dollar, Canadian dollar. You see the U.S. dollar, Canadian dollar. The dollar's up on the Canadian dollar today. Also, the New Zealand dollar, you're seeing that down 1% today as the markets are down. And there is a tight correlation that you will see. What is the, I always view it more or less as risk on, risk off correlation. There's so many other factors, Murray, that come into play. And really, I think the best advice for everyone is you don't always need to understand. You don't need to understand something so that you are the expert and need to talk about it. But as long as you could observe the relationship, if you could observe the relationship, and be aware of it, that more often than not is enough. And good thing that you are, Murray. And if you do any further searching today, whether it's on YouTube or through a search engine, and come up with something that more concrete and could share it, that would be awesome. Boom, boom, boom. What's going on here, Milty? Milty, good morning, good afternoon, good to see you. Gold, silver, oil, etc. Yeah, again, we could see the markets trade down and gold trade up, especially if things continue to become more pronounced with the US and China. You're going to see, well, dollar will probably be bid also, but you're going to see also the dollar will probably be bid in that type of situation, but also will be gold, right? Gold and Bitcoin will be bid in that situation. The only thing that really affects either of these two is if you get any type of liquidity situation, then of course they'll be affected. But as saw also in 2008 and now again in 2020, they're the first to rebound and then afterwards really rocket. Boom, boom, boom. US dollar, Swiss franc. Let's take a look right now. US dollar, yeah, it's retracing back against Swiss franc. You're looking for places to sell, right? You're definitely in a range expansion here to the downside. You could see it coming back right now into this area of resistance, right? And then you got, again, just up one more level at the top of this consolidation. You have another area of resistance over here at 1.95. Let me draw it in now that this pair is moving. And for so long, it wasn't. Let me just draw that in. Then you could focus in on also this little bit of local resistance you're coming into. If price is rejected over there, right over here, yeah, that opens up an opportunity as well as over here does. Two opportunities that you're coming into on the US dollar, Swiss franc. And that also is beginning to look like it is becoming tradable. So a lot of interesting things develop over here. What happens if this is a pullback, a slight pullback? By the way, if you are short here on the US dollar, I mean on the S&P 500, as we talked about, getting short here as the 8-hour made a lower low, you're now protected. It's kind of like an option. You're now protected to any downside movement. And then if price starts making a higher high, just you exit the trade then, right? Then you're taking off that little bit of possible, whatever this retrace come. It could be, we could trade up on the session today, or we could be trading down another 1.5%. I have no idea. What was that related to? We were just looking at New Zealand dollar, US dollar. If this is just a pullback, a slight pullback, and we're going to be resuming out of this, continuing to risk on as we've been in a super supportive risk on environment, that's kind of where I'm leaning right now as I watch the downside over here. But New Zealand dollar, US dollar, now that it's pulling back over here, do you begin watching it specifically if this level down over here of 0.638 support holds and if you make a higher low, right, and you start resuming off this, that's the place to get long New Zealand dollar, Japanese yen. Could be something to watch out for. Similar situation here on New Zealand dollar, Japanese yen. You're coming now into an area of support, probably looking to buy that support, and you also will probably be looking to sell that resistance. New Zealand dollar up. We already looked at that. Similar situation here with the Swiss franc. I don't know why I tend to avoid the Swiss franc. It's the truth. I avoid the Swiss franc unless we are in a crisis. Then I run to it. Pound US dollar. Looks like it's being rejected very nicely here off this resistance. Looks great here for the short side. The questions are going to be, you could also buy off this support. You could also be buying off of this support. That's, as we're talking about, maybe the US dollar looks like it's going to be in a prolonged trading range, or is right now for sure. These look like good opportunities to both sides now on a lot of these pairs. Pound Japanese yen really looks like it's holding this area of support over here. Let's see what happens. That might continue to hold and then get a breakout. What happens when you get back up there? You could really play both sides of these markets right now. That's pretty unusual for my type of trading. But this resistance over there, that also becomes attractive again on the upside. Well, Kips, the Swiss franc was a huge safe haven during this last crisis, right? I would venture to say that the Japanese yen performed the best, followed by the Swiss franc, and then the US dollar. That might not be, yeah, that's exactly what happened during the crisis. Yeah, I don't like trading that pair either. I don't like trading that pair either. So, I mean, what was I was trading New Zealand dollar, Swiss franc, and Australian dollar, Swiss franc during the crisis, as well as also Australian dollar, Japanese yen, New Zealand dollar, Japanese yen, and yeah, I mean, Swiss franc all the way, right? All the way. New Zealand dollar, Japanese yen, same thing, but the Swiss franc was that's where I was attracted to for good reason. For good reason. Remember that. Yeah, they're all flawed. They're all flawed. That's why we don't like them. That's why they're all going to zero. That's why we want to own Bitcoin. That's why we want to own gold, right? S&P. We've looked at, there's not much going on with the S&P here. You definitely, if you're short now, you're short, holding that short right over since the 8 hour made the lower low. And if it starts making a higher high, you exit that trade. Is the NASDAQ continue to do its thing? Is Apple skyrocketing? No, Apple's unchanged on the day. Apple's unchanged on the day. Silver's lagging gold right now, and probably will continue to do so until gold takes out 1800. Silver's lagging right now, and although still quite bullish over here, anyone needs to position into silver, right? These pullbacks now into any support are where you want to continue to pick up silver. I was looking at the other day with you all in the afternoon whether or not silver was going to be the better investment than gold during the foreseeable future, and it does look like that. It does look like, unless we get another crisis. If we get another crisis, and we just looked at the Swiss franc pairs, if we get another crisis, you're gonna see. Well, let's look at gold to silver right now. This is the crisis right here. If you get a crisis again, you will absolutely see the gold to silver ratio explode to the upside. But if this is, and I don't see another crisis coming anytime soon, right? Which also means over here that perhaps silver should be continuing to outperform gold to the upside. However, right now gold is doing the work. Silver is putting in a nice little consolidation pattern over here. This will probably be a continuation pattern to the downside. Gold doing the work right now. Silver will follow. But in this moment, over the next couple of days, definitely look for gold to continue to outperform. Yeah, silver has both industrial uses as well. Boom, boom, boom. Oh, so all right, swing trader perspective, silver versus gold. That's a good one. I like that. Let's check that out, and we'll see. Swing trader perspective. Oh, did I lose it? Yeah. So swing traders perspective, I think that for sure that this channel is going to continue to rise with gold leading the way. I think that if you're looking out the rest of the week and into early next week, this is going to continue to go gold's way. And then you wouldn't want to be involved on playing the silver until you get a breakout here of this trend line over here to the downside. Once you get a breakdown over there, then it's like the green light, I think, to go ahead, and silver will outperform. Until then, I think it'll be gold. That's kind of fun exercise. I like it. Yeah, if we get a crisis, you'll see another. If we get another crisis, you'll see a jump. Are you going to see perhaps a tight correlation right now? If you see the equity markets, I don't think the equity markets are going down. First of all, right? If the equity markets to come down, test this area of trendline support down over here, this horizontal support over here at 30.30, will you see a slight pullback in precious metals at this time? Probably. But you're talking about a couple of days. You should be definitely long-minded here. The precious metals, they are trading or traded earlier today at 8-year highs, right? So there's no indication here that they are breaking down. And if you get any pullback into support, that's where you want to buy. Just change your mentality. If you get any pullbacks into support, well, that's where you want to buy. That's not like, stop thinking it's the top and we're going to roll over. It's not rolling over. It's going up. Let's check out here. Boom, boom, boom. Yeah. So where are we looking for as far as support levels? We just called them out over here. It's the support at 30.30. That's nice horizontal support. Then also down at 90.70, you have more support. Above those levels, this thing continues and probably will continue for the foreseeable future. Also to be in a range, but trading up. I don't really foresee any the I don't foresee the counter trend move coming just yet. We'll continue watching if this little bit of a retrace becomes something more. But the markets are barely down today. Markets are barely down today. Everything looks good. Bitcoin down, pulling back a little bit, but we all are pretty astute on what's going on with Bitcoin. This looks really bullish still. So, I mean, buying off supports is the thing to continue to be doing in both Bitcoin and in gold. And yeah, there seems to be a lot of movement right now in FX. Yeah. So yeah, that's what we were though. We were positioned short big time, GP, right? And that's how you do it. That's how you do it, that's why we have the currency markets. That's why what are you going to do in the stock market, right? I don't know. I tried to get my family in long dollars and long Japanese yen at the time, but in the equities, and they that stuff's complicated. People are buying the Australian dollar dip as they should be, as they should be. Let's look at the Australian dollar, Canadian dollar. This could be a big move over here. We just talked about this earlier in the session. As you look over here at the resistance that we're trading up against, and now you saw this down price bar. If the next up bar is a price bar, and overnight we're able to get long over there, that could be a good entry, right? And so watch out for that. Don't necessarily in this situation. If you start making a higher high during London over here, that could be a good trade here to the upside. The opening song that we took a look at was from this site called artist.io, and it's called Honeymood. Honeymood. Yeah. Yeah. All right, let's take a look at some other Australian dollar pairs. Let's look at the Australian dollar US dollar because the US dollar is definitely firming up here at the towards the high of its session. And you can see here the Australian dollar US dollar, the dollar is now making that lower low, taking out this area of support. Basically, when we looked at this early in the session, what we said was if that area holds, this is a long wick, and then you start making higher highs, that's a long trade that we want to be involved in. So let's see what the dollar could do over here, or if the dollar coming into this area of resistance as well. Be aware of that, the 97 level. That was the way on the way down, this yellow little dot over here that we said if we broke that support, then we could see some follow through right down. We extended to the 96.50 level. And if that broke, we were looking down even further. Dollar is kind of neutral here, consolidating, get back above this 97, and then take another look at these highs over here. Then we could see that bigger move. But the dollar, again, is more or less trading in this range-bound range. I'm looking for that to continue. I know a lot of people are often looking for big moves to happen. We just came off of some really big volatile moves. Look at this move over. Even this melt up was a big move to the upside, followed by the crash, followed by a melt up, right? Going sideways right now, something like this, let me highlight this. This is exactly where I think we're headed. I think we're headed towards something like this right now, right? And I think we're going to see, as I've been talking about, that big, prolonged, volatile range could be tough to trade if you're like, I don't know, following momentum, not planning ahead. Let me move this blue box over here. This is what I think more or less, right? We're trading within. That's the range I've been pointing out to y'all as well. All right, maybe this goes a little bit higher like that. But I think we're in something like this. And that's what I'm prepared for. Zoom out. Can't see. There we go. How's that? Is that better, Hanson? Awesome. So we'll see. And again, clearly, I don't know that that's what's going to happen, but that's what I'm looking to happen over here, right? This is what I'm looking, is going to happen. I don't think we're crashing down. I don't think we're crashing up. All right. What else are we looking at over here today? First of all, thanks again for definitely going ahead and now really hitting those like buttons. I do. It's nice to know that you all are interested and appreciate what's going on over here. So we're grateful for that. Grateful for the support. Gold continues to look good, right? Again, that was not the crash. Now it's even trading up over here during the session. As it was trading red, coming down into the support, we had the same tone. This is an opportunity to look for a resumption up and buy. This is not a crash. Any pullbacks into any supports, you continue to look to build and buy positions into gold and Bitcoin. If the markets trade more or less sideways, that could be the perfect condition for Bitcoin and gold to go ahead and continue to thrive. And also, don't forget that gold, both dollar and gold are up today. Both the dollar and gold are up today. We've seen that correlation a lot, right? So just be aware, under the environment that the dollar is rising, gold generally is done well at times as well. You're seeing that correlation today. I'm pointing it out because most people think that for gold to do well, the dollar needs to be weak. That's not true anymore. Well, Hamid, you're the best. You're the best. Definitely great having you in this community, and I'm grateful for you always. Yeah, that's because everyone's looking for things to go straight up and straight down. Bitcoin's looking great. Yeah, Bitcoin's not following this session. That's all right. That's all right. There's going to be many sessions coming up where Bitcoin's having some, 10, 15% gains in a day, and everything else is doing what? It won't even matter. It won't even matter. What are you going to say that, the dollar was up a 0.5%, but Bitcoin was up 10%? That's what we're going to be seeing. Boom, 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 boom. Let's check out the euro. British pound next. This looks nice over here. I like this to the short side. Let me zoom in on this chart a little and drag it over centered for you. This looks very interesting to me now. If you know, I had been putting up, let me do it for you really quick. I had this like pattern right here, right? And you can see that we're towards the top end of it now, being rejected over here by the resistance. I like this here to the short side right now. I'm not necessarily interested, and I'm not interested enough to take the trade, but that's where I foresee it going. I think that's just an important exercise, is actually taking the trade, is being able to see the market, being able to forecast where it's going next. And that keeps you kind of in the rhythm. That keeps you in the rhythm for when you do choose, the few trades that you're looking to attack on. You're just definitely much more in the flow. So Maximiliano is asking a question. If you go long with the NASDAQ rather than following the index, isn't it better to pick a certain stocks that outperform the index, like Amazon, Facebook, PayPal? Um, yeah, I absolutely Maximiliano. I don't see anything wrong with that. But the thing about what's nice about trading the indexes is that they're rebalanced, right? They're rebalanced. If one of those, if Amazon ran into some problems, right, and was trading off 30%, as Amazon, often does trade off 30% from its all-time highs, like Bitcoin, and you will see that if you are in trading the index itself, I don't know, you know Maximiliano, at your age, I have to be honest, I would be focused in on the individuals. I would really be doing my research. I would really, I'd really be picky and choosy. I would probably have Square in there as well. I would probably have Square in there as well, but I would do that. I'm not interested in doing that because I don't it's not the greatest opportunity out there. Again, if we wanted just to go long the Nasdaq, we'd think, is tech going to get crushed? Even if there's a second wave, is tech going to get crushed? You know, I are we going to take out these March lows? There's a lot of uncertainty and fear here, a lot of the unknown, right? Would you be a buyer or a seller on a pullback on the Nasdaq? At the same time, there's a lot of uncertainty there because it could go either way. It could go either way. These things are already priced pretty much to perfection. There's a lot of liquidity out there, though. It just seems to me that there are better opportunities, right? And if you had to ask me, or if you wanted to, wager anything on it, Bitcoin is going to outperform the Nasdaq over the next, 6, 12, and 18 months by an enormous factor. Yeah, that's a great point, right? Especially and specifically Apple, right? Apple would definitely be a casualty as the trade war does heat up, and it will. And it will heat up, especially if President Trump gets reelected. The trade war will definitely heat up. Of course, if Joe Biden gets elected, then everything will. Well, tech should explode, right? Because there's no question that everything will become amicable between the U.S. and China, and we'll continue, selling ourselves. Carly, yeah, there's so many ways. You could just Google how to buy Bitcoins. I have in the description below some resources over there. I've had the best experience with BlockFi. Yeah, down significantly now over here now. Testing the lows overnight, and I'm gonna remove this blue box now that you all saw it because we don't need that on our chart. And I really want you to, that I mean that's the safety thing that right there off of that resistance was just getting short over there on the 8 hour and just hold it until it makes a higher high, and then you have insurance on any pullback you have over here, specifically any prolonged pullback if this does become something. But at the end of the day, really just come back with me, come back just a few days. Really, price is in this range. I'm not looking for this to be the top here and for us to see some type of prolonged sell-off or market crash. This just looks like a normal pullback right now. Actually, you want to be thinking about, if you're not involved in in the short over here, where you want to be getting long. If that were to occur right away, well, again, the more I look at it, the more it's just not interesting right now, right? So best to stay away or milk your short over there. Dollar is becoming a little bit interesting and or active. Could we see a breakdown further over here? That's in play. There's a lot of cross pairs in play. I'm leaning towards the Australian dollar if we see any type of resumption out of this pullback. And then on the downside against the dollar, that becomes interesting. What about the US dollar, Japanese yen? That also is something to think about over here as we are pulling back into this resistance. Yeah, this is what makes it exciting. Even when things are not happening in certain places, they're happening elsewhere. That's a great comment over here. Just went long on gold. Negative news on zero hedge equals the bottom. Jordan, let's take out this comment from Miguel. Miguel's asking that I know I don't use the RSI, but do you think it's good to use as a tool to confirm if equities are oversold and use important resistance lines to confirm? Um, Maybe Miguel. I mean, let's look over here, for example, at the 8 hour S&P 500. I pull up my true trend, and I kind of have a perfect read on the market. Let me add in the RSI. I want to see what the RSI could do here that would offer some type of edge. Yeah. So Miguel, I mean, really quick because sorry, it's been so long since I put an RSI on a chart. But the true trend does everything that the RSI does. Actually, if you look at the true trend, the trend CCI, it is almost exactly in unison with the RSI, right? And I know when my true trend gets over 200 that it's overbought or oversold. Same thing happening here on the RSI. So pretty uncanny, right? But here you can see where the RSI is oversold. So is the trend CCI is oversold. So you could just put up those levels if you want on the true trend or just know where they are as I do. But yeah, you're better off having the true trend than the RSI by an enormously large factor, as well as then you get the entry CCI to look for that near term momentum and whether you're not overbought, if you're buying into overbought or selling into oversold. So yeah. Yeah, I don't use moving averages. I don't use moving averages. I don't use RSI. I don't use fib levels. Outside of the true trend, it's the main focus is on support and resistance with the help of trend lines. That's where the market's at. That's what you're looking for. Yeah. So, and back to the S&P where we are right now. What was that nonsense on my chart? Back to the S&P over here. What is this? How do I delete it? There we go. Yeah, it's just a pullback. It's just a pullback. Price is consolidating. Price is between a range right now. For this to become something interesting to attack to the downside and taking a short here is not an attack. That's just a tactical position. But really looking to get short here on the S&P, things are breaking down. We're not close to there right now. I think as we go towards this downward impulse, right, as the trend CCI turns negative, that's a buying opportunity coming up here on the S&P 500. That's how I'm looking at it. And what type of reaction is the Nasdaq having over there? It's not even down. It's unchanged basically on the session. So the pullbacks are far and few between. People definitely right now, rightfully so, are so cautious. Two things are happening. First of all, you got a good amount of traders right now that have been trying to short this market for a long time now, and they're getting fatigued. Although there's been really good opportunities to the short side. If you're whatever, but they're fatigued. And then you're also seeing people, those same traders, who this whole time have not been buying the dip. For the whole time, they've been trying to only get their short trade off, not been buying the dip. But each time it's been buy the dip, going back all the way to the end of March, right? So we'll keep watching, but until things change, they haven't changed. Until things change, they haven't changed. Yeah, we're all waiting. But much like zero hedge is always waiting for the crash. The crash. The thing is when things are crashing, it's pretty obvious, and things are not crashing right now. Yeah, Sal, I mean, that's something we looked at yesterday in the live training session over here. Not going to get into that right now. But if you're interested in Sal, there's a link below for the course. It would absolutely benefit you greatly. The direct mentoring, there's no question. If you are serious about looking how to find out how to trade the markets profitably and consistently, is the best place that you could be. Let's check out Tesla. It's been a long time since we followed over here at Tesla, and that's kind of cool. Coming back now, let's just extend that little bit of a trend line as an area of a guide. You could see if I do this now, though, I'm going to clone that 1 second. I'm going to make this one lower just to see if it happens. All right. This is nothing more than an exercise. I'm not looking to trade Tesla. So by the way, the last time we looked to go long Tesla was down off the support over here. Are you looking now to take profits on that trade or continue to hold it? Or are you looking to add to it on a resumption up? Those are the things that you need to be asking yourself right now. Anyone who after the break here got long on Tesla, right now, as you're coming into this trend line over here, you have to consider if we close below there, taking profit on that trade, right? That's a warning sign. As it was over here last time, a warning sign to get out of the trade. People exited the trade. And just as last time, you didn't get back in unless you took out this resistance. Same thing now. If you do take profits on Tesla, right? If you close down below this trend line today and you take profits on Tesla, do you short it? No. You don't short this. You try to pick the top of this huge uptrend, but you would be looking to buy now back towards this test of this support down here. And or if you broke again upside, made another leg up, then you would be looking to go long Tesla. But right now you should be looking and cautious of taking profits right over here. I mean, Amazon looks like a beast. Is that parabolic or is that just healthy? You be the judge over there. But yeah, that looks like a place. If I were in the trade, I might want to take some off and look to continue to build back into it. What's this drawdown? Over here between September. What was that drawdown? Probably 30%. Yeah, 35%. 35%. It seems like Bitcoin in a bull market, if you're not positioned into Bitcoin in a bull market, you're waiting for those 30% drawdowns to occur. Amazon seems similar. There's one more over here I want to take a look at with you, and that was between this level over here. That was 25%. Okay, that was 25% during the crisis. And then back in 2018, you had a 35%, right? So, Amazon is, maybe think of Amazon. Someone was looking at, should I play individual stocks rather than the indices? Well, if Amazon was one of your choices, instead of buying here at the high, I might be looking to enter in on every, 20 or 30 and or 30% pullback on Amazon. Yeah, it does. No question, Amazon has gained huge market share and had a reason to move further towards automation in their factories during the pandemic. Amazon obviously has a strong future. I continue to use Amazon, and unless I stopped using Amazon, like Facebook, what's Facebook doing? Wow. If you would have asked me, was Facebook at its highs, I probably would have said no. Here it is, and yeah, I mean, I deleted Facebook. It's been a long time now, and probably the best thing that I ever did. And just like Disney, Facebook, I don't really like talking about companies that I don't believe in or that I'm against. I should rather say. So if you, I don't know what trade you're talking about, but so if you're talking about Amazon, if you're talking about Amazon, then obviously that's not something you're looking to sell, right, Dave? So when I'm talking about entering the trade on the 20% or 30% pullback, that's not something you want to sell. That's something you want to hold the rest of your life, right? Unless something drastically change. Bitcoin also, we're not talking about selling for another 18 months. All right. So if we're not talking about looking for places to sell. You're looking about buying gold. You're not looking for a place to sell. You're looking for a buy. And a lot of people will get into good trades. Like a lot of people, like there are. So this is the greatest example. I'm holding positions from when I added back around 4,800, 5,500, 6,000. I don't know, 6,200, 8,500. How many traders bought Bitcoin down here, right? At 5,000, at 6,000, and then sold that at 7,000? Do you think they did a good job? No, we're 18 months later, we'll be looking at selling Bitcoin. And you guys are all, I'm going to catch so much at that time, so much heat for being bearish on Bitcoin. I'm going to cause the top in Bitcoin. It's nothing like that at all. I can't affect Bitcoin going up over here, and I won't be able to affect it going down. But I know the cycle of Bitcoin, and that's what I'm positioning myself into over here. Again, one of my greatest mistakes ever. One of my two greatest mistakes ever, both in the equity markets, was back in 2003. I thought Amazon was going bankrupt. I could have bought a couple of $1,000s worth of Amazon there, in my early 20s, and, held that investment. It would have been the best investment of my life, and for the amount of money and the return. And also Apple, I remember, I think the year was somewhere around, I don't know. I know it was trading at $22 a share, right? It was right around here. No, yeah, right. Somewhere around here. Somewhere right around here. It's when Steve Jobs started turning it around. No, but it was up here, $22. And I remember saying to myself, oh my goodness, if I would have just bought and held Amazon, right? Just buy and hold all those years. You got to not only be a trader, it's trading and investments, right? So you have to learn that when there are particular times when trading, as was during the crisis and early directly after, really good. And in those times, you want to be, funneling money into long-term investments as well. Wait, Dave, you think my job is YouTube, not trading? I've been a full time trader for 20 years. It's how I support my family. It's how we have everything that we have, from school to education to our investment properties. Dave, I don't really. Dave, I love your. By the way, your emoji you got over here. This like, Dave, whatever, brother. We live a happy life. It all comes from trading. It all comes from investments. There's only 1 year in the past 17 years that I have not traded full time. It was for a period of 6 months, and that was when I was studying in the seminary. I don't. It's because I just haven't taken the time to ban him, but don't even worry about it. There's no ETF for Bitcoin, but you could use GBTC if you're stuck within the equity markets and you're looking for an ETF. You could use the grayscale. The ticker is GBTC. Yeah, so Joe, that's not something that would affect you and or your trading or or any of your business. So that's not something that I'm here to share with you. Fielding some of these wonderful questions right now. So people are either looking to improve their trading, right, or not, right? So mostly people in here are never going to make money trading. That's for sure. That's for sure. Most of the people in here are never going to make money trading. That's for sure. If you're interested in something other than improving your own trading, I guarantee that you're not going to make it. People like myself and others are going to crush you because you're competing in the capital markets. You're competing for the greatest resource, which is money, right? So good luck. That's all good. I'm not even, David. I'm sorry that they're disrupting the chat in itself. That's not cool. Um, but it doesn't bother me at all. Right, Farron? I wish I could highlight that comment. You got to wonder how people shit on folks for spreading such great knowledge. But I could understand why. You have to have compassion for people. You have to understand a lot of people are miserable. A lot of people, they don't really do anything with their time. They're not looking to better themselves. Um, by the way, Gino, I'm reading some of these comments now. It says, "Do you think that the giants like Amazon have to gain much power in politically speaking? I think corporations are enormously powerful. They have all of their lobbying efforts. There's no question that corporations already have really huge political clout." Um, there you go, Julio. Someone knows what's going on. But that would make sense, Julio, as you are in the training program. Thanks, Planet Pluto. Definitely like you bringing the positive vibe over here. YouTube is YouTube. The internet is the internet. You will always have people like that. It's all good in the hood. So, only asked the question based on you making a living comment since you only do 3 or 4 trades a week. I don't understand or follow the logic there, Joe. Do you think that if I took 30 trades a week, then you could, you know, that I would be more profitable? Is that what you think? No, Joe. Actually, that's really one of the greatest problems is people taking too many trades. It's the amount of an investor's profitability, as we just looked at in Amazon and in Apple, is time horizon, and the longer you hold an investment or trade, the more opportunity that you have to come out of that side trade successfully, Joe. Which is probably why when you take a lot of losses, right? You're over trading and you take a lot of losses, forcing things not to happen. You can make an extraordinary living and return taking 3 trades a week. People in the course, the goal is to get them making 2 to 3% a month, right? First, turn the corner to profitability. That's the first goal in the course. Let's take a look at that right now. Let me show you this little bit of goal, because you have to have goals. You have to have goals. Look, I don't know if GBTC will only perform on the way up, but I know Bitcoin is on its way to go up. So through retirement accounts, I had no choice but to invest in GBTC, and that's what I did, and that's fine. If you go over here where it talks about the first goal is turning the corner of profitability, Joe, yeah, you got to be able to go ahead and you got to be able to first turn profitable. Traders generally within 3 to 5 weeks of the program are all here. anyone following the program is here after just 3 to 5 weeks. Then the next goal is to get consistently profitable, right? I view that as if you're able to average 1% a month for 12 weeks, then you have achieved that. To go from 1% a month to 2% is very easy. Traders start off risking a 0.5%, right? You increase your risk up to 1%, right? Now that right there, that alone, without improving how you're managing your trades, right? Which is where the real difference comes in trading, how you manage your trades when you learn to go ahead and push those winners. Right over here, traders have a win to loss ratio of 1-to-1 and about a 50% win rate. It's easy to get here. How do you get from here to here? That's what we work through in managing trades. To go from 1% to 2%, first of all, without improving your trading performance, which you will continue to do, you could just increase your size, your risk from a 0.5% to 1%. 20% a year, that's insane for any retail trader. That's the goal to accomplish. That could, over a 15-year period, over a 10-year period, that could go ahead and that could make you a significant amount of that could save you a significant amount of money. You would have $1 million trading account. You'd be making a significant amount of money per year, enough to live off the rest of your life. You're good to go. Yeah. So, do you think that 2 to 3% per month is unachievable? Take the course. You could do it. There's no question about it. But just like in trading itself, there are a percentage of people, Joe, who just, think that, well, the way to do it is by taking too many trades. And there's no possible way that you can make a living taking 3 trades a week. That's because you're simply struggling out there and you don't know which way is up. That's because you're confused. You're in the right place. You're in this environment over here where you're being taught by someone who has more experience and more success than anyone you know and is sharing knowledge here that for free has made a difference in a significant amount of people's lives. I get feedback and all the time, people who have been trading for 20, 30 years, professionals, thank you. You can't find what you share here out there. And then you get people who have been struggling in this, for 7, 10, 15 years, and all of a sudden, grateful as can be, showing their appreciation because they're constantly profitable. Yeah, so Joe, I don't know. I don't get it. And I don't think he has the right to come in here and spread negativity. And by the way, probably the most important thing is that when you're forced to take 3 trades a week, right? And when you're over here, right? If you want to take at that point 2 trades a week or 4 or 5, you could ascertain what's best for you and your own performance. But you got to take 3 a week to get over here. You got to take 3 a week to get over there. Taking those 3 trades a week forces you to actually watch the markets. It forces you to pick the good setups instead of just a trade setup. It's gonna help you pick better trades, and then it's gonna cause you to focus in on those trades more than if you were just trading at will. So taking those 3 trades is absolutely crucial to your success. Yeah, that's true too, right? And you don't need to, right? You don't need to trading is nuanced. Trading cannot be taught it's very difficult to be able to teach someone how to get here in a manner that is more or less systematic. That's what we do. This is systematic, right? To be able to define such a nuanced thing as trading and do it in a way where people could have success. And if you don't think 20% a year is success, then you have to recalculate what you think your goals are from the markets or what that you're going to be able to achieve. But don't think if you were doing 20, 30% a year that you would not be able to scale up there simply by attracting more capital and saving more. Yeah, Brad, I'll try to block them. I don't get the opportunity though because I don't have. It's just I'm focused in on the charts and I'm seeing comments come up, and I'm not like that. All right, that was kind of a deviation. Markets are trading towards their lows, making new lows on the day, and the dollar continues to firm up over here. That seems to be what we're seeing. We're seeing Bitcoin pulling back, and we're seeing gold maintaining as strong as can be. This is setting up for a possible place to look over here to get long gold now that we are having a pullback here, holding the breakout, and that if that resumes off, this could have broke out without giving an opportunity. We are looking to buy any pullbacks here into support. Gold definitely looks like it has potential to provide some of the best returns, as does Bitcoin. Right now, though, you have S&P trading off and dollar on the back foot a little bit. Over here, what happens in the euro US dollar? We were watching this yesterday. We were watching this resistance being taken out, and now we're still watching to see where this closes today. This does have the potential still to close above this support. However, if it doesn't, and that is now then new resistance, right? And let's put it right there. If that's resistance, and then we get a signal, is this an opportunity to short here on the euro US dollar? I think so. I think this opens up a place where you have two trades. You're definitely buying support over here after this breakout of the descending wedge. If this area holds, that's the first opportunity to get long, as will further pullbacks unless we break this bottom of the falling wedge over here. So continue to look to get long here on the euro US dollar, but at the same time, as we're being rejected by this resistance, you can see it on the 3-hour time frame, as we're being rejected by this trend line resistance over here, and we are being rejected off of that, and we are pulling back again. Is this an opportunity over here to get short if we hold this resistance and then resume off it? Yes, it is. I think that opens up both sides. I don't trade Elliott wave analysis at all. I added zero. To keep it really simple, I'm focused simply on price. I'm focused on price, and I'm looking at the market structure through support and resistance levels, trading off of that with the help of trend lines. And yes, the true trend, it's helpful. It's helpful. SPY looking like an entry. So a lot of people will be looking at the SPX as it comes down towards 3,000, I believe, at the whole number. 30 is actually the place to look for. If that holds, that's a good place to lean off and look to buy in. You can see the levels over here, 30. If we pull back into there, that's a good place to lean in to look to buy, especially while above this trend line. Those are really good areas to lean in, as well as even if we trade down to 29.70, all of above there continues to be look for opportunity to buy. Don't forget, I think we're entering into a consolidation period right now or next. So look to buy the bottoms. Yeah, Joe, thanks for being here. Thanks, Joe, for smashing the like button. And everyone, good session today. If you enjoyed this session for real, aside from the little bit of trolling we saw, please go ahead and hit that like button at the last minute just to let me know that. That's cool. Thank you for that. We'll be here again tomorrow. We'll be doing the same thing at 9 o'clock a.m., a half hour before the markets open. There's a lot going on today in the markets. I like how the markets are trading right now. I definitely have the possibility later today of updating through TradingView if anything really looks like it's going to be setting up for the London session ahead, something that I think that you should consider and focus on. I'll update you through that too. Yeah, Miguel, this is really true, and that's what you should be. I have a problem letting my winners run for too long. Had a trade yesterday at resistance but didn't sell because I thought it might keep going up. You have to be mentally prepared to understand that to get from this level, to get from over here, which you could get to pretty quickly. Over here, you could get to pretty quickly. But going from here to here, That's a question of being able to let those trades run, which also means if you're letting your winners run, that a portion of those trades that looked like they were winners or slightly into profit are now going to be actually stopped out at break even. That's mentally a little tough for traders to be able to trade through. But basically, I hear you using a one-to-one take profit to stop loss area, right? And you're trading about 50%. Once you learn that by letting those few, once you get those few trades that really you get your profit from, and you need 2 or 3 of those a month to make the difference, that's when you go from this level to this level. You're going to get there, Miguel, because you're focused in on it. And as long as you're focused in on something, that's when you're gonna be coming. No, I gotta go, Mr. Blue Box, but maybe tomorrow we'll have time to check that out. Kevin, no, I don't always. And initially, obviously, my stop loss is at a loss. All right, everyone. I'll see you tomorrow. Have a great day. And I'll be publishing a video this afternoon, taking a look at the markets with you, probably focusing on the NASDAQ, probably focusing on whether or not it could be peaking up here and what we would be looking for. That's it. Thanks, Jesse. Dinosaurs. All right, everyone. Have a great day. We'll talk to you tomorrow.